Hi traders, you're welcome back to the Forex Geek channel. In this video, we're just going to be diving into the world of copper. All right. Okay, basically, we are going to be discussing a copper trading strategy. We're going to be talking about an important strategy that you can use to trade copper. All right. In this video, we'll just break down the essential techniques, explore market dynamics, and discuss key signals that every trader should be aware of when dealing with copper in the forex market. Okay, so if you are ready to sharpen your trading approach, then you are in the right place. All right. And don't forget to hit that like button and subscribe for more in-depth trading content. So let's just quickly start with an overview of copper trading strategy. Okay. Copper is actually one of the most actively traded commodities, known for its sensitivity to economic changes and industrial demand. Right now, its price movements can signal broader market trends. Okay, when you look at copper, you are not just analyzing a metal, right? You are observing an integral part of global economic activity. So in our discussion in this video, we're just going to be focusing on how to identify and interpret these movements and how they can influence your overall trading plan. Okay, first of all, let's just quickly talk about the fundamentals, right? Understanding the basics of copper trading strategy means recognizing the factors that affect copper prices. All right, supply and demand dynamics play a huge role here. For instance, a surge in manufacturing activity, especially in industries like electronics or construction, can increase the demand for copper. All right. On the other hand, disruptions in supply, be it from mining issues or geopolitical tensions, can lead to notable price shifts. So by keeping an eye on these macroeconomic indicators, traders can better position themselves in the market. Now let's just dive into some technical analysis techniques. Okay, when analyzing copper trading, or rather when trading copper, it's essential to incorporate both trend analysis and pattern recognition. Okay, so you start by examining price charts over various time frames. You can actually start from the daily or the weekly time frame. Okay, because these time frames can generally provide a solid overview of the market direction. Okay, so look for trends. Okay, it's very easy to spot trends on your charts. Okay, so basically, are prices generally moving upward or downward? Okay, so considering the current trend, we will notice that we actually have a wider, bullish trend. But then after this bullish trend was broken, you can see that this is recent price activity, right? Now, the first thing is to identify the trend. Okay, so here we can see that we had a bullish trend, but there was a breakout to the downside, right? We can see that there was a breakout to the downside. And right after that breakout happened, it's as if we are having a sort of consolidation pattern, right? We're having a sort of consolidation pattern around here, right? Can you see that we're having a sort of consolidation? So currently we are not in a specific trend, so we just have to watch out for a breakout. We could have a breakout to the upside or to the downside. Okay, now this is the daily time frame. Okay, so first of all, you have to start by examining the price trend on a higher time frame. All right, and then the next thing for you to do is to focus on key technical indicators. Okay, many traders use moving averages to smooth out price data and highlight trends. All right, so a combination of short-term and long-term moving averages can reveal potential crossover points that may signal shifts in momentum. So for example, if I'm going to add a moving average to the chart, right, I can actually decide to add, two moving averages, with different periods, right? So here I can just, this is the trading view platform, right? You can actually use any, depending on your preference, right? Your preferred trading, or rather analysis platform. Okay, so I'm just gonna change the input. I'm gonna change the input. I'm going to make this. Let's just use the 20 and the 50 moving averages, right? So this is the 20 period moving average, and I'm just going to add the 50 period moving exponential moving average as well. All right. So I'm going to come here, change the settings to 50, and I'm going to have to change the color, all right, so that for easy identification, right? So now basically some traders decide to use the moving averages, and they use the crossover strategy. Basically, when the 50 EMA crosses above, when the 20 EMA crosses above the 50 EMA, you have a buy signal, right? And on the other hand, when the 20 EMA crosses below the 50 EMA, you have a sell signal. So that's a very easy strategy to use. Okay, some traders can also decide to add on other confirmation indicators like RSI or any other indicator of their choice, just for the sake of confirmation. Okay, then in addition to that, always remember, these technical tools are not infallible. Okay, so they should be used in conjunction with broader market analysis, all right, and your own personal trading plan. So another critical aspect of copper trading strategy is understanding market sentiment. All right, what are other traders and investors feeling about copper? Are there news, events, or economic reports that are likely to influence sentiment? Yeah, so you should be asking yourself those questions and getting answers to them. Are there any factor whatsoever that that could influence the direction of copper? And then tools such as the commitment of traders report can give you an idea of market positioning and whether a majority is leaning towards a particular direction. Okay, so keeping a pulse on sentiment helps in anticipating potential reversals or accelerations in market movement. In addition to technical analysis and market sentiment, it's important to discuss risk management. All right, a solid copper trading strategy a solid copper trading strategy isn't just about identifying opportunities, right? It's also about protecting your trading capital. And one effective method is setting clear stop loss levels that align with your risk tolerance. So, for example, if you were to enter a buy trade right after you get a signal, an ideal place to set your stop loss, right, is going to be below near swing lows, right? And then if you are in a sell trade, an ideal place is for setting stop loss is going to be above your nearest swing highs. All right, so if you entered a sell trade around here, you could have considered setting a stop loss, say around here, right? You can set a stop loss above the nearest swing high. If you enter the buy trade, this would have not been a good one, because the stop loss level is going to be far from your entry point. So let's look for a better option. Okay, let's say we had found a good opportunity around here. Yeah, would have considered setting our stop loss right below the swing low, right? Because that's going to be an ideal place for setting a stop loss for a buy trade. Okay, and then this way, if the market moves against you, you have predefined exit points to minimize your losses. Okay, and position sizing is another vital element. Okay, by only risking a small percentage of your account on any given trade, you safeguard your portfolio from any single adverse move. Now let's just bring it all together, right? Start your analysis by reviewing both the fundamental and technical aspects of copper. Okay, for example, if an economic report indicates strong industrial growth, you might see corresponding bullish signals on your charts. All right, and then you can combine this with your technical indicators like your moving average crossovers or RSI readings, just to validate your trade decisions. All right, document your analysis, review your risk parameters, and all those. Okay, So it's always important for you to document your analysis, review your risk parameters, and then execute your plan with confidence. Okay. It's also crucial to remain flexible and keep learning. Okay. It is very important. Markets are dynamic and no strategy works every time. So regularly backtest your approach, review past trades, and adjust your strategy as needed. This continuous learning process is what sets successful traders apart from those who struggle to navigate the complexities of the market. Now, before we wrap up, let's summarize some key points. Okay, copper trading requires a blend of fundamental analysis, technical insights, and a robust risk management plan. Okay, so by understanding the underlying economic drivers and utilizing technical tools, you can develop a clear trading strategy tailored to copper and the broader forex market. Always keep an eye on market sentiment and adjust your approach as conditions evolve. Okay, I hope you found this deep dive into copper trading strategy insightful and actionable. If you enjoyed the video, please take a moment to click the like button and subscribe to the channel for more engaging and informative content on Forex trading. Also, leave your comments below if you have any questions or topics you'd like me to cover in future videos. Thank you for watching, and I look forward to seeing you in the next video. Until then, stay informed, stay strategic, and keep trading smart.